These two stocks, MP and TMC, were trending yesterday, the 24th of September 2025. So we're just going to have a look at them. MP is up modestly, okay, fractionally, 0.07%. Okay, let's see what we have. Underlying trend is bullish. Yesterday it lost 4.65%. Let's see what we have. Projections was saying, oh, it's still saying 72.01, 76.06, 78.57. Extrapolation of the 3-day moving average is saying that that weakness may continue up till Tuesday the 7th. If, as a matter of fact, up till Tuesday the 7th of October. As a matter of fact, it's actually expected to maybe continue towards the end of October of this year, 2025. Okay. Price pressure momentums, I believe let's see what we have. They're still, the 10-day moving average is still trending. However, the derivatives are fractional. One is even severely bearish. Yeah, and the 21-day moving average is bearish as well. Not trending at all. Lost, but I didn't. It could be improving. It could be improving depending on how you want to look at it. Is it half empty or half full? But I would say it's decaying. I would say decaying. But in the midst of all of that as well, you could still see that it's a mix of things. Some people are buying as well, and some in the midst of the weakness that is going on, some deep buying is going on. So it may be too early, maybe too early to buy the dip. Possibly it could be. We could just quickly apply the market grid for MP. Let's see what we're gonna get on this daily charts market grid. Let's have a look and see. Okay, let's see where it lies in the midst of its price range. We have, okay, 79.07 is the top, and the base is 70.33. The stock is at 71.28. So yeah, it is down here, languishing. There's a good chance it may continue to print lower prices. Yeah, that's a good chance that might still happen. Probably that's why the algos are projecting lower prices. Okay, let's have a look at TMC. TMC is also up fractionally 0.65%. Okay, yeah. If anything, okay, let's have a look. Let's remove this market grid and apply the price pressure momentum to that. It will give us the price pressure of the 21-day moving average. So extrapolation is saying here that strength will remain in place. It lost 2.5% yesterday, but regardless, it's saying that it may still keep printing high prices up till Wednesday, the 1st of October. And then after that, we may get a decline that may remain in place up till Monday, the 3rd of November. Projections are saying 6.46, 7.05, 7.41. Earlier on, as as of the 12th of September, it had severely bearish and downward projections 0.0171, 1.64. Those are downward projections. And then upper projections 7.17, 8.24, 8.9. Yesterday printed 6 point no, on Tuesday printed $6.7 intraday high. Okay, coming down to the price pressure momentums, they are all both trending. However, we have a negative derivative on the 21-day moving average, indicating that yeah, some the selling pressure has affected some positions opened over the last 21 days. Yeah. Okay, let's apply the market grid here for TMC to see what we're gonna get. Okay, the market grid, let's see what we have. Okay, the stock is at 6.20 right now. 6.20, we'll place it. Okay, it's in the support zone, so yeah, it may well continue to. It could test lower prices, even though the algos are saying it's going to print high prices. Let's just glance at the 4 hour chart on TMC to see what it is saying, where it lies, $6.2. Okay, so it's here as well, and it's almost neutral. You could say that yeah. Okay, well, here the trajectory is to the upside. It could yeah, maybe it's, well, going by this, would say maybe he may attempt to defy the gravity that is in effect on its daily chart. So yeah, it's a mix of things. We'll see how it goes. But these two stocks are, yeah, they were trending. Let's just see what's been going on about them.
In a complex and volatile market for critical minerals, MP Materials and the Metals Company have both experienced significant investor interest, driven by discussions of government support and their strategic roles in securing vital supply chains. However, they face different opportunities and risks. MP Materials is strengthening its position with major U.S. government contracts and partnerships, while TMC is pushing forward with its deep sea mining ambitions despite regulatory uncertainty and environmental pushback. MP Materials, consolidating dominance with government backing. MP Materials, which operates the only US based rare earth mine, is capitalizing on the urgent domestic push to reduce reliance on Chinese rare earth supplies. The following factors contribute to its current trending status. Government secured investments and contracts. In July 2025, the U.S. Department of Defense, DoD, made a landmark $400 million investment in MP Materials, becoming its largest shareholder. As part of the deal, the DoD agreed to a 10-year purchase agreement with a guaranteed floor price for the company's neodymium and praseodymium output. This provides a crucial hedge against market volatility and undercuts China's strategy of depressing prices to crowd out competition. Expansion of a vertically integrated supply chain. The DoD deal supports MP Materials in building a new magnet manufacturing facility in the U.S., which will expand its capabilities beyond mining and processing into downstream magnet production. The new facility is intended to supply both defense and commercial customers, creating the first vertically integrated rare earths to magnet supply chain in the U.S. in decades. Commercial partnerships. Building on the DoD's vote of confidence, MP Materials also recently announced a significant partnership with Apple, which will invest in the company and establish a rare earth recycling facility. This demonstrates strong private sector interests alongside government support and provides further validation of MP's long term strategy. National Security Catalyst. Community talking points emphasize MP Materials' strategic importance to national security. With China controlling most of the world's rare earth refining and magnet production, government investment in MP is seen as a necessary move to build domestic resilience. However, despite a narrowing loss in major deals, MP Materials still faces the challenge of ramping up production at its new facilities and achieving sustained profitability. Competition with lower priced magnets also remains a commercial hurdle outside of government backed contracts. The Metals Company, TMC. Speculation surrounds deep sea mining catalyst. TMC's discussions are dominated by its efforts to commercialize deep sea mining and the potential catalyst that could send its stock soaring. Deep sea mining prospects. TMC holds exploration licenses for polymetallic nodules on the ocean floor in the Pacific Ocean's Clarion Clipperton Zone. These nodules contain vital battery metals like nickel, cobalt, copper, and manganese in a single ore body, potentially offering a new source of critical minerals. Seeking U.S. regulatory approval. In March 2025, TMC announced it was seeking a U.S. exploration license and recovery permit under the Deep Seabed Hard Mineral Resources Act, DSHRA, potentially bypassing the UN's International Seabed Authority, ISA. This move positions the company to benefit from the U.S. push for mineral independence and creates a potential pathway to commercial production under a national regulatory framework. Investment sentiment. The prospect of gaining regulatory approval and moving into full production is fueling strong investor optimism. Some investors are anticipating multi bagger returns upon successful commercialization, driven by the potential for a new, large scale source of battery metals. A recent analysis by Seeking Alpha concluded the company is de risked and potentially undervalued. Regulatory and environmental hurdles. While the U.S. pathway offers an alternative to the ISA, it remains highly controversial and legally uncertain. The ISA launched an investigation into TMC in July 2025 amid accusations of regulatory circumvention, and over 35 governments have called for a moratorium on deep sea mining. Environmental groups and scientists warn of the risk of irreversible ecological damage, representing a significant headwind for the company's plans. Commercial viability challenges. Beyond regulatory issues, the commercial viability of deep sea mining is also debated. Analysts at Iceberg Research released a crushing report in September 2025, citing low commodity prices and underperforming test results that undermine TMC's economic model. Broader market context. These company specific discussions exist within a larger geopolitical and industrial context. Geopolitical tensions and mineral independence. Both MP Materials and TMC benefit from increased U.S. government focus on securing critical mineral supply chains. The U.S. has implemented tariffs, passed supporting legislation, and established international partnerships to counter China's market dominance, which has been highlighted by China's recent export controls on certain rare earths. Increasing demand for rare earth magnets. The global energy transition is a major demand driver for rare earth elements. McKinsey reports that demand for magnetic rare earths is expected to triple by 2035, driven by the rapid growth of electric vehicles, wind turbines, and robotics. This demand underpins the strategic importance of companies like MP Materials and drives speculative interest in new sources from companies like TMC.